Hmm. Okay, I think that should be working. I'm away at the moment, so I'm on a slower internet connection than usual. But I thought I'd do this anyway while I was away because I said I'd do them every week. And a lot's been going on, obviously, in markets over the last week. I mean, this time last week it was the gold and silver. The big sell-offs we saw there. Um, I mean, silver was the dramatic one. We'll have a look at these when we get into it. I just need to be a bit patient today because my charts aren't flicking around as quickly as they normally are. I mean, silver went from 120 on Thursday afternoon. I mean, it's traded as low as 65, 64 overnight, so it's been a big move there. Um, if you're new to this weekly live stream, what I do, we'll go through some of the major markets, indices, gold, silver, oil, FX, and see where the opportunities might be in the next week. And if there's any stuff you want looking at, if you put it in the chat, we'll take a look. Let's just do some housekeeping first. Let's do a risk warning. This presentation is only for educational purposes. It does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for a transaction in any financial instrument. David Jones accepts no responsibility for any use that may be made of these comments and for any consequences that result. You should consider whether you understand how spread bets, CFDs, futures, foreign exchange work, and whether you can afford to take the high risk of losing your money. Trading is risky. Right. And the only thing I'd say this week, like last week, if you haven't subscribed to already, if you could subscribe to the free newsletter I send out every week, if you go to bit.ly/DJ email sub, the link is in the description. I'm going to write a bit this weekend about being a bit concerned that the risk of US stock markets forming a top. That's what I'm going to talk about this weekend. We'll touch on it during today, but it's a bit of a niggling concern for me because I think like a lot of people, I talk about my investing stuff. About 65% of my pension is Nasdaq and S&P ETFs. So a big sell off in the US wouldn't be good for my pension. I'm just getting a little bit twitchy about what's going on in the US, but I'll talk about it in more depth in this weekend's newsletter. So if you haven't signed up, if you go up and sign up to that, and I try and send one out every week, blah blah. There we go. That's it. So let's go back to markets. Let's have a look. Right. Let's start with this sell-off in silver and gold last week, shall we? I mean, it was pretty incredible. I was away last week. I was at the Paris Retromobile Classic Car Show, so I was busy looking at shiny cars, and then I did have one eye on what was going on at the markets, and it was incredible. There's the daily chart in silver. We'd had this astronomical move or exponential move where it ended. Where did it end last year? $71. Oh, yes, delete it. Ended last year at 71. Oh, sorry, it's really not happy with the speed here, is it? And it traded as high as Thursday as 121. So we'd seen a massive move. Then, of course, that collapse on Friday. And I think it's one of those things that I don't think anybody saw this coming or would pinpoint it to that day. I mean, clearly a market that was gaining like that. At some point, we were going to have a correction, but who knows when the correction comes? And I don't think anybody really expected the size of the correction in one day either. But it does happen from markets to time that we do get these massive shocks. Which for me is of course one of the reasons things like stop losses are important. Because I want to be out if we are getting these massive shocks. So we are where we are. I bought silver yesterday actually for a trade, but I got stopped out overnight. So I got stopped out on that spike. Here we go, that spike there. After about 11 p.m. last night. So I did get stopped out of that trade because I wondered really looking at what it did this week. So that was the Monday low. The Monday low in silver was 71. And I bought in yesterday. I think it was about 74 yesterday, wondering if it was going to hold, and it didn't. It spiked lower, so I got taken out of it. I ended up getting taken out on the low, which again is unfortunate, but it's going to happen if you trade enough. You'll occasionally get taken out. Your stop will get kicked out, and it ends up being the low. Normally, for me, stops work quite well, but that was an example where I got stopped on the low. So I don't have a trade in silver. I think it's an interesting market, and I don't know where it's going to go next. I think on the one hand, you could take the view, well, everybody who bought who missed out on buying silver, let's say from the run in December from $60 to 120, the price is down at 76 now. So you could take the view, well, are they going to view this as a bargain? They're all going to pile in and think, fantastic, we get a second bite of the cherry. Let's all jump in. So that's the bullish argument, I think, for silver and gold down here. The not so bullish argument is the volatility will have absolutely scared the pants off people, and they think I'm going to give this market a wide berth. So I really don't know where it's going to go, but I thought the trade yesterday was a fair enough trade. Really interesting market to watch. Let's see what happens next week. While we're on the subject of silver, let's have a look at gold. I mean, the trend in gold, there's a trend that I've been looking at from August on gold, when gold was down around $3,300 an ounce. And of course, traded as high as 5.6 last Thursday. We had the sell-off, touched 4.4. So we had a 20% drop in the price of gold from Thursday through to Monday. It spiked through that trend line. But for me, it's something I talk about in the WhatsApp group, is this 42.70 level that was the low on New Year's Eve and has held. So I think, that looks a bit less crazy than silver. I think there's an argument to be to be a buyer of gold. But at the moment, if I was buying off the daily chart, I'd want to stop the other side of 42.70 at the moment, just given the volatility we're seeing. And perhaps it all just needs to calm down a bit. There was the move from the highs. This is the hourly chart, the move from the highs down into 4.4, bounces, a big rally again, Monday into Wednesday, it rallied $700. So that's about 15%, something like that. Sold off again overnight, and we've seen the bounce. So all a bit messy, obviously quite a jittery market, pretty volatile. But I would say, the bull case for gold is better than the bull case in silver for me at the moment, based on the medium term. But perhaps these will be significant highs for a while, given how spooked lots of people will have got by just a massive move. These are, silver, even though silver has over the years been quite a boring market for lots of the time, and then has crazy runs and then goes boring again, it's still a major financial market, and for a major financial market to lose almost 50% of its value in 5 or 6 days is pretty scary, I think, to a lot of people. So, there we go. So I'm watching with interest and perhaps a bit less inclined to go jumping in and do anything at the moment. So there we go. That's that. Let's go back and look at stock markets. So like I say, over the weekend, I'll talk a bit more about just my concerns about US stock markets at the moment. But in a nutshell, this is the S&P 500. What's making me a bit worried, not a bit worried, but thinking I should maybe lighten some of my exposure, long-term investing exposure. It keeps breaking out. This is the S&P, right? So it keeps breaking out. We had a little breakout in December. Didn't go anywhere. This is breaking through the old all-time high from October. We had the breakout again in Jan. Didn't go anywhere. And we've had the breakout again at the end of Jan. That didn't go anywhere. So it's a market that keeps has set all-time highs, fresh all-time highs, on 3 different occasions since October, that October high. But there's no follow-through. So I just worry a bit. Is it running out of momentum? Yesterday, this is the S&P on the daily, it traded down to a new low for the year, back to where it was middle of December. We're seeing good recovery now. But it's just chop at the moment. So from a trading point of view, I haven't traded the S&P or the Nasdaq in recent weeks because we're just chopping around. From an investment point of view, like I say, I think like a lot of people, from a long-term investing in ETFs and stuff, I've got a lot of exposure to the US, and I'm just wondering, is it starting to struggle up here? The Nasdaq is worse. The Nasdaq, we had the all-time high in the Nasdaq at the end of October, and we've not had an all-time high since then. This is the Nasdaq. It had a look very close at the end of Jan, got slammed since then, and we're seeing the big recovery today. So yeah, they're boring to me from a trading point of view. And I just wonder, we had a massive move, obviously, since those tariff lows in April. I mean, just looking at the Nasdaq, it traded down to 16.4 and bounced back to 26,200. So we had, it's nearly an eight. It's not an 8,000. It's a 6,000. Hang on, let me do the maths. It's a 10,000 point move nearly, isn't it? Which is it's more than a 50% bounce back we had in the Nasdaq last year off those March, April tariff lows into where we were the end of October. So that is a big old move. So perhaps it's a bit too over optimistic to expect these markets to move much higher in the short to medium term. I don't know, but I'll put some more words down in the newsletter this weekend. There are still interesting markets out there, absolutely. I came out of a FTSE trade this week, FTSE 100, the UK stock market, and I bought it in here somewhere. And it was great, because the FTSE 100 hit fresh all-time highs just a couple of days ago. So these European stock market indices are still strong. I'd absolutely be a buyer of the FTSE. It was one of the ideas in this morning's WhatsApp group, because it sold off. That was the Wednesday all-time high, just ahead of 10,500. The market dropped 250 points into this morning. We've got the old support from back here, all the usual. We've got good trend in place. There we go, going back to the mid of December on the FTSE. So I think that's still positive. And I'd absolutely be a buyer of the dip of the FTSE going into next week. But very different, moving very differently to the American market. And the Spain, I am long. This is another trade I've got. I put it on the same time yesterday as the silver trade. So I bought the Spanish 35. So the Spain index, the IBEX. So again, an all-time high on Tuesday this week. It's got clobbered, and my bet is, are we going to go back and look at all-time highs? That's had an amazing trend, the Spanish index. I mean, the tariff low in the Spain index was about 11,000, give or take, and it's traded as high as 18.2. So again, it's had a big move like the US indices, but it's a move that's still carrying on. So to me, in recent weeks, the European indices, particularly the Spanish and the FTSE, have been much more attractive than the US markets because we still have these trends going. If we take a look at the DAX, the German index, that did set fresh all-time highs here beginning of the month or halfway through the month. Hasn't done much since then. Has fallen off and a bit choppy. So not too much exciting for me in there. But the Spain and the UK and the Italian, I think. Where's the Italian index gone? There it is, Italy 40. I think that's still, there we go, that's still going strong as well. So that hit an all-time high on Wednesday as well. So even though the US is boring, I would say from a trading point of view for me, there's still other markets out there moving. If we have a quick look at the Asian indices, the Japanese, the Nikkei hit fresh all-time highs, I think, today. There we go, big old candle in the Nikkei. The Nikkei doing really well. There's the trend in the Nikkei. So there's another market that I would be happy to buy the dip on. Is the Nikkei as that continues to move higher. If I was thinking about stops, I'd probably want to be the other side of 51,000 when it comes to the Nikkei. So there are absolutely stock markets out there that are moving. It's just strangely for me at the moment, or perhaps not so strangely, given what's going on in the US when it comes to politics, we're seeing a bit of indecision and not quite sure from US stock markets. So there we go. What else should we look at? Oil. Let's look at oil. I did a trade in oil this week. That worked well as well, actually. I bought oil this week. Was it this week or maybe it was the end of last week? I came out of it in the last couple of days. But oil's a funny market to me as a trend follower at the moment. If we go back to 2022, the Russian invasion of Ukraine. It's almost 4 years ago now. The trend is still down. Back then oil touched $130 a barrel, and here we are now at about 63. So it's pretty much half what it was, where it spiked up to on that Russian invasion of Ukraine. The last 6 months or so have been, I would say, pretty boring for the price of oil. We've had big volatility, but ultimately the April lows held in the oil price, so that's been a big level. But the trade I did this week was on the shorter term, on the hourly charts, and I think it must have been in here. I did it, yeah. So Monday of this week, just because it had this run up. There we go. That was the trend from early Jan. Had the run up, came down. I bought it. It rallied up, and I came out when it turned around. There's an argument to be a buyer again, because we're still sort of hugging this trend line from early in Jan on oil. So if I was doing a trade at the moment, if I was a buyer today at 63.20, I put a stop loss the other side of the low for this week, which is 61 on my chart, and sit with it and see, right, do we get another run at these all-time highs at $66.50 a barrel? So I think that's interesting to watch, but still fairly boring overall. I think if you can start breaking 66, because this was a big level from September last year. So those what's that, a 4-month high, 4.5-month high in oil at 66. So I think it's interesting to see if it can break that, and then perhaps we get a more extended recovery in oil. But in the short term, I'd be buying it anyway. In currencies, actually, the other trade I've got on at the moment, I've had it on for just over a week, is sterling yen. I think I've talked, not sterling yen, Swiss yen. I think I've talked about these. I didn't do the live stream last week, but the week before I was talking about currencies against the yen. So I bought sterling yen, and I'm in the trade, and I bought it. Look at the trend. Swiss yen, sorry. Sterling yen looks pretty similar. But so I'm in the trade for Swiss yen. Fresh all-time highs yesterday, maybe an all-time high later on today, and let's see. But some great trends there. And again, I bought the dip, so I bought it in here somewhere last week. Can't remember where, but bought it in there. And if you look at sterling yen, I'm guessing we're going to see a similar sort of trend. It's stumbled a bit the last couple of days, but overall positive. So I'm still in that trend. If you look at the dollar index, the dollar, I should have bought this because it was a false break, I thought. This move the other week, when was it? A week last Tuesday. That move, we had these old lows from July. The dollar went sailing through, and the next day we didn't get much follow through. So for me, that was absolutely a false break trade to see if the market's going to push back into the range, and it has so far. But I'm not quite sure what I would do at the moment on the dollar index. So I'm quite happy to leave that one. What else has been interesting? Oh, stocks. Let me talk about stocks. I've been trading. I think I talked about it in my newsletter over the last weekend. I've been trading US stocks again, a mix of US stocks. At the moment, I've got these are all the positions I've got, however many I've got. The best performer, I did Amgen this week, so I'm in that stock. And it was a bit of a fluke, but I bought it. I think here, or was it last week? Anyway, about 340. I bought it at 340, and earnings have come out and it's done really well. The best performer overall is Ross Stores. So I've been in that one since, there we go, in there. I think I mentioned that in the newsletter. So I bought that. And so I'm running a mix of US stocks, medium term, daily charts, no interest in short term, and just doing a mix of stuff to see how it goes. They're not all doing well. Apple was the first one I did end of October, and that's been underwater for a lot of it, but it has come back recently. But overall, I'll update the numbers this weekend in the newsletter. As of yesterday, the return on margin used is about 20 odd %, and it's only been running for not even 3 months yet. So I like it because it's a nice, relaxed way of trading. And even though US stock markets are choppy because we're looking at the index, there is still lots of individual stocks in there that are moving, and something I run this WhatsApp group and I've run it for 3 years. Something I do regular webinars in the WhatsApp group, and something we looked at last time. I did a webinar on this approach to US stocks, why I was doing it, and the sort of things I was looking for. And during the webinar, I was talking about. I only did it a couple of weeks ago. I was talking about how sluggish US indices, Nasdaq and S&P are at the moment. But if you look at the underlying stocks that make up that index, I'm just waiting for something else to load on my other screen, and it maybe might not load because the bandwidth is struggling. Even though the indices as a whole are choppy and not exactly doing much, here we go. There are still, obviously, good trending stocks. So let me, if I drag this over, hopefully this works. If I drag it over, there we go. There we go. If I add that into there, right. So this is the S&P. These are the S&P constituents, right? If I sort it by days since 1 year high, so even though the S&P index is not doing much at all, within the S&P, in the last week or so, hold on, there we go, there are still 133 stocks that made a fresh 12-month high. Yeah, so that's what's that? About, I can't even do the maths anymore. 25% of the S&P. Is that right? Yeah, that is right. 25% of the S&P made a fresh 1 year high in the last week. All right, so there is stuff out there trending, is the point, even though the indices are a bit boring. So there you go. There's an example. Oh, I'm in those. So that's one of my stocks, Amitech, whatever they do. Yeah, great trend. You'd never know that US markets were mainly sideways looking at that one, would you? What's that one? Amgen, that's the one I bought the other week. What else have we got? Analog devices. What a great trend that's been. I mean, what's that done this year? Came into this year at 272. Is trading at 325 now. So that's 20% up for the year. So my approach is to try and find stocks that are trending and jump on board the trend and manage the risk, all the usual stuff. And my plan is to do 2 of these a week and just run them over the medium term. So that's that. That's all that stuff done. So yeah, but if you there's details in the newsletter about the WhatsApp group, and I talk about it in the WhatsApp group, the approach. And even though US indices as a whole are a bit flat, there are still absolutely interesting stocks out there that are moving. I mean, they're having quite a bounce back today. Look at the S&P. So it loses it all one day, and already we've clawed back, by the looks of it. Yeah, we clawed back all of yesterday's losses in the S&P. But it is this choppiness where it's up one day and down the next. For me, doesn't make for a good trading approach, but the other markets are still doing okay. Right, what we'll look at now, we'll take a look at some of the stuff you want to look at. Like I say, the only thing I say for today, if you're not on the newsletter, sign up to the newsletter, free of charge, comes out every week. The link is in the description, bit.ly, DJ emails sub, and I'll talk a bit more about US stocks and sort of the signs I'd look for that the US market is topping at the moment. But let's take a look at some of the stuff that you want to look at. And I've managed to lose the screen with the questions on. Oh God, bear with me. Here we go. Don't normally have my usual setup today. Copper. Do you know I've got a trade on copper. I've been in the copper trade for a few weeks, and it hasn't done much. So someone's asking about copper. I'm still in the trade. It's slightly against me, but I'm happy to stick with it because this is the price of copper. We had that massive sell-off last summer on tariffs, didn't we? Because the US imposed tariffs on imports of copper. So massive sell-off. I did wonder back then, surely this is overdone. Should have bought a copper ETF, chucked it in the pension, didn't do that. Anyway, the market's recovered all the way, and here we are. All-time highs just a week yesterday. So overall, I'd be a buyer. Yeah, I'd be a buyer. The closest I'd have my stop is the other side of 555, which is the low from the end of December. So I'm in the trade. I'm long. It's chopped around. It's slightly against me. But like you say, I can't remember who asked the question. Rikeko asked the question. Yeah, it didn't sell off as much as gold or silver. So for a long, I'd be at least the other side of 555, and I am long, and I'm happy to stick with it. Let's see what happens. So let's see. Can we have a look at hims and hers? I've never heard of hims and hers. What is hims and hers? Let's have a look. It might be a bit slow. Okay, hims and hers health. Right, let's have a look at that. Ouch. That is not a pretty trend, is it? Let's have a look. How much? I mean, that is a stock that's gone from $70 in the summer to $21 today and is still falling. As of today, it's still falling. Yeah. So for me, no interest to me in that, apart from maybe being short. We've gone, at the moment, it's hit the lowest since November 24. So it's just over a year low. I mean, we're back to levels historically, where we have seen support. So perhaps there is a point where the buyers come back in. So for me, if I wanted to be a buyer, I'd keep an eye on it. I'd have no interest in being a buyer at the moment because it's the trend is so what's the word I'm looking for? Down. That's the word I'm looking for, because the trend is down. So for me, no interest at the moment. But this $18 was a level on the way up from the autumn of 2024. So let's see what happens back then. I'm just watching this on another screen, and there's a massive lag between what I'm saying and it appearing, but hopefully it's all working on YouTube. So that's hims and hers. What else have we got? RDW. Let's wait. Red wire. Let's have a look at those. Bit patience. I'm on Welsh broadband in Welsh Valleys, or North Wales Valleys, so it's not very quick. Oh, that's interesting, isn't it? Red wire. So, I mean, what would you say on that? I think you could make the argument, as usual, to be a seller or a buyer. Hang on a second. There we go. So you could make the argument, right, the trend is down and this is just a false break and they're going to go down again. That's absolutely an argument. But you could also make the argument, well, it had been recovering since December, and is this just a false break and buy it? I don't know. And it's one of those ones that I always think, do you know what? If I don't know, then I'll go and look at something else, because I don't want to try and stare at something too long to try and have an opinion as to where it's going to go. So I don't know. If I was a buyer today, I'd put a stop the other side of $6.90, right? Which is a wide stop, but it's a volatile stock. It's gone from $5 in December to $14 in Jan. So yeah, there's that. So it's pretty volatile. So that's what I would do. If I was waiting to buy, or I was a buyer today, I'd put a stop on a 690 and see what happens next. Absolutely, it's a valid position to try and sell a rally, but at the moment, I could sort of give that uptrend one last chance to be an uptrend and see if it recovers. I'm just going to check something, because I'm just getting a bit confused because I'm talking now about this, but what I'm seeing going out on YouTube is 10 minutes behind what I'm looking at. So I'm just getting a little bit confused as to what's going on. So I'm just going to open up it on my phone and see what it looks like on my phone and whereabouts YouTube thinks I actually am in this live stream. Okay, no, it is. Okay, that looks better. Right. Okay, so that's red wire. So I'm a bit on the fence, but I'd rather be a buyer than a seller. Thoughts on the Nikkei? Yeah, we did have a look at that. I mean, I'd be a buyer. The market's going up. All-time highs today in the Nikkei. There we go. Bish bash bosh. I'd be a buyer. That's a big old candle today, wasn't it? It gapped lower, recovered it all, and hit fresh all-time highs. So if I was a buyer, I'd have a stop below 51,000 on the Nikkei. Yeah, but a great trend again in the Nikkei since May 2025. Société Générale is another one. Société Générale, SA, Class A. I guess it's those, isn't it? SocGen, Class A shares. They've done well, haven't they? The old European banks. I mean, this has done really well. Where did that start? 2025. So a year ago, it was 27 euros. So it's tripled almost in a year. Oh, my laptop is about to die. Let's plug that in. So it's not 27.54. It's not far off tripling in a year. But anyway, so it's done really well. For me, the usual, the trend is up. So I'll be a buyer. As usual, the only question is, I think that's an interesting one for next week. It hit 70, 77, 30 on Wednesday, traded back to 70 and a half today. That's an interesting one for next week. I would be a buyer. Interesting one to have a look at on Monday. I put a stop, the closest I want my stop, the other side of 67 euros. But yeah, great trend there. High Tide and American Battery. Now, American Battery, I'm familiar with this because this has been one of those nutcase stocks, isn't it? And I think I don't, we've had the crazy nutcase move, haven't we? In September, we've definitely looked at this before. Went from $2.50 to $11.50, and here we are back at four ish. If I had to do anything, I'd be a buyer. I'd put a stop under three and see what happens. But I just wonder, that crazy move, is it all over now? A bit like silver. We've had the crazy move. Does it just do nothing for a while again now? But that's what I would do. So far that three level has held. So I'd buy it and put a stop under three. High Tide. High Tide. High Tide Inc. I wonder what they do. Right, let's bring them up. I mean, again, I'd buy it. I'd buy it because we're near support. I'd much rather buy something that was in a better trend though. But I'd buy it, and I don't like these little $2 stocks. But I buy it and I put a stop under two. But again, yeah, that's almost halved since September last year, and it's still under a bit of pressure. But yeah, I'm much more a fan of stuff that trends rather than this smaller, crazy volatile stuff. The crazy world of crypto. Yeah, Bitcoin. We didn't look at Bitcoin, did we? I think, do you know what's interesting? I mean, I'm not a fan of cryptocurrencies, as you may well know, but because I'm old and because I think it teaches people the absolute worst trading habits where if it starts going against you, just stick your head in the sand because it will come back, and people have been rewarded for bad trading or bad investing by just hodling. And of course, at some point, it won't come back. Is this the point? I wonder if I think it will come back. There's so much negativity. I was reading it on Twitter, and maybe it's just the crazy world of Twitter these days. But there's so much negativity yesterday about people saying, "Oh, Bitcoin's going to zero." A year ago, I was worth $1 million, and now I'm worth $10 because of Bitcoin. So it's massively negative, and I just wondered, is it overdone? And does it build a base and does it bounce? I think it's interesting. That uptrend in Bitcoin from October 23 has well and truly gone. But the lows from 2024 or the summer of 24, $50,000. I think that's an interesting one. So if I was a buyer today, and I wouldn't be a buyer today, I'd wait for it all to calm down a bit. But I'd have a stop the other side of 50, sit with it and see what happens. But yeah, the doom and gloom and the grief on Twitter, you'd think it was at like 10 cents. But I mean, it has halved, in all fairness, of course, it has almost halved from those highs in October. So it's a big old move, but silver almost halved in 5 days. Bitcoin has taken a few months to almost halve. So they need to grow a pair, all the Bitcoin fans. That's not real volatility. But it's interesting to see what happens next, I think. And I just wonder, does it build a base down here? Because it was only, when was it last here? Is it before the election? Yeah, it's before Trump's election, isn't it? So it's only just over a year ago, November 24. Then it got that boost off the election. And then rolled over from October. So I think it's interesting. I still obviously I don't understand the blockchain, and I've got absolutely no interest in understanding the blockchain. I don't think there's going to be a point in my lifetime where we're all paying with Bitcoin. So it's all a bit meaningless. But as a vehicle to speculate in, I think it's interesting, and it delivers lots of volatility, and it has trends and support and resistance and all of that. And I wonder if 50k ends up being support. Let's see. Who knows? Crude is on the move in the last hour. I think there was something, wasn't there? Someone posted right at the beginning saying the US have told its citizens to leave Iran. I think so. Maybe that's what's making crude move, if anything. Maybe that's what it is. Yeah. I mean, I bought crude on Monday afternoon because there was that gap. This is the gap. It was a good trade actually. The logic behind the trade was good, and it did work well because crude last week finished at 65.80 and then opened on Sunday night $2 lower. And I only looked at it Monday afternoon in here somewhere, and it opened $2 lower because there were talks between Iran and the US, um, that maybe over the weekend that people thought, will it de-escalate any threat of military action and blah blah blah, and that's why it gapped lower. But I thought it's a good opportunity because that's what it looked like on Monday. It was a good trend and all that. So I bought it and the trade did okay. Let's see. Let's see what happens. It's probably for me. It's probably one for next week now, crude oil. But let's see. So yeah. So I think the bubbles burst in Bitcoin. Maybe for now it has, like in silver, the bubbles burst. Well and truly burst. But let's see. So that's it really. Lots to look at next week. So for me, US stock markets, very weird. I'll write more about them this weekend. But I'm being a big fan of S&P and Nasdaq over the years. Been great from an investing and a trading point of view, but a somewhat frustrating few months, I think. But European stock markets still doing their bit. The old FTSE and the Spanish, the Spain 35 and the Italians. And of course the Nikkei is still doing its bit. So that's good. Gold and silver are interesting to watch after the weeks they've had. So there's still a lot to watch out there. And my US stock stuff is doing well. What's the big mover today? Citigroup. Okay. What's happened there? Must be earnings. Whatever. So I'll be back. I'll be back next Friday. Any questions, feel free to drop me an email. My email is dj@davidjonestrading.co.uk. I don't have all the answers, but I've been doing this a long time, so I can definitely give you an opinion. And that's it. If you'd like to join the WhatsApp group, there will be details in the newsletter. There's a discount for the first month. The average duration of people in the WhatsApp group is nearly 10 months. So clearly they like it. I like doing it. It's only a 1 month commitment, so you can try it and see what you think. But details will be in the newsletter. Otherwise, I'll be back next Friday. Oh yeah, Twickenham tomorrow. No, I'm not going to Twickenham. Too expensive for me, Twickenham. But hopefully there'll be a surprise win from the Welsh. But yeah, I wouldn't be risking any money on it. I'd rather be a buyer of Bitcoin than a buyer of Wales at the moment. But let's see. Okay, we'll wrap it up there. Have a good weekend, everybody, and see you all next Friday. Good luck with your trading.